Are you curious about how to tap into your largest asset, how to really leverage your home? We're going to talk about that today. My name is Ashley Chavez. I'm with Keller Williams Realty.
I'm Stacia with Cross Country Mortgage. So Ashley, it's always surprising to me, and I'm sure your phone rings like this too. It's like, oh my gosh, I found the perfect house, and they already own a home. And I always say, well, let's talk about your assets. And they go, my largest asset is my house, which I always say, that's the goal. Typically, our largest asset as Americans is our home. And so it's one of those situations where I try to coach our buyers to always, and our sellers to always be prepared. So how are you prepared on your largest asset? Do you get those phone calls when people say, Ashley, I found the perfect house. I want to put an offer in, and you go, cool. Where do we go now?
Well, exactly. They have their home. Maybe they don't want to sell the home, but they want to purchase another property. They're not sure what to do. They know they have all this equity and they really aren't sure what direction to go. So yeah, I love to hear what you are advising all your sellers and buyers on.
Yeah. So as our largest asset, our homes typically are. And so how do you, and it's great, right? It's typically where most wealth is. In fact, if you look at the largest wealth positions in the United States, the top 1/3 of people in the United States own real estate, and that is where their wealth comes from. It's kind of crazy, right? And so I always say there's never going to be more dirt put on this earth. So dirt is super, super valuable.
Yep.
However, it's equity, and equity is not something that's liquid. So how do we get into a liquid position? There's really sort of 3 tips I try to make sure my clients always understand. Number 1, always have a home equity line of credit on your property. So as soon as you close on your house, make sure your lender that you're working with, or talk to a lender and get a line of credit sitting there or available, maybe 6 months to a year after you purchase the property, and be able to tap into that equity as appropriate. Okay. The thing about home equity lines of credit is they're really inexpensive. They're fairly easy to qualify for. You can keep them at a $0 balance, so you're not paying any interest back. But if you ever were in the need to have access to that equity, I call it an insurance policy. You're able to insure into that policy if you need it, and it's sitting there in the event that you have a situation where you have to pay for something, or you are ready to leverage the equity that is in your house and buy something else, right? So really, really important. That's number 1, and that's probably the simplest thing. The second thing is if you're in a position where you're thinking about putting an offer in on something and you don't want to be contingent on your other home selling, meaning that Ashley would have to sell the house first before you can close on the new home or put an offer on the new home. And we know in a competitive market, contingent offers aren't always accepted. There's sort of 2 other things to consider when you don't necessarily have liquid assets readily available. The first is a 401k loan. So Ashley, I always try to coach clients on understanding how all of their assets come into play to buy another asset today. Okay. Because a house is an asset. That's what it is. I know you're emotionally connected to the beautiful outdoors and the fireplace and all the things, the view of the ocean, but really it's an asset. So you have to look at all of your assets, including your retirement accounts. When you're getting approved for financing, make sure you're providing all your assets. That IRA that you think doesn't matter, it might really matter. And when you look at a 401k loan, what you're doing is you're borrowing from future you, retirement you, you're leveraging that asset, you're paying yourself back the interest, and you're purchasing a new asset today.
Okay.
Maybe you can put a non-contingent offer in, purchase the house. Maybe Ashley, then you do sell the person's exiting property. They're able to take those funds and pay off that 401k loan. I like 401k loans because the money goes back to the individual, right? To the person. You're borrowing from future you to buy an asset today. That's how I describe it.
And that's great when instead of putting it contingent on your house selling, you would do the 401k loan, then sell your home without that pressure, sell your home, pay yourself back.
You got it 100%.
Okay.
And even for first-time home buyers, people are like, oh, I don't have any money. If you have money in your 401k, this is another great tip. Borrow from future you to buy an asset today. Pay yourself back the interest. No penalties. You're not liquidating that 401k. You're not paying penalties. You're not not paying taxes. It's just a loan. And most 401k companies will allow for that.
Very cool.
The second thing to consider, in a market where there's volatility in the stock market and the bond market, you might have money that are sitting in securities that you don't necessarily want to sell because they're either at a loss position, or the inverse can be true, where you've got all of this money, you've made these stocks, and you've got potentially big capital gains that you pay from a tax perspective. So how do you leverage those assets without liquidating them to purchase a home? If you've never looked into a margin loan, it's another example of something that you could consider. You can take a loan against your invested assets. For most assets, most invested stocks and securities, most holding companies will allow you to do this. Take a margin loan against those assets, and you can utilize that towards the purchase of the down payment as well. It's another tip to avoid potentially some taxable consequences or selling things at a loss.
That's great, especially right now where a lot of sellers are wanting to hold on to their homes, but they are wanting to buy a secondary home or a vacation home or a rental property. So all three of those options are going to be really helpful for buyers and sellers in the market right now.
Yep. Super important to make sure you share that full financial Polaroid picture with your lender so that they have a really clear understanding and give you good advisement. I always tell my clients, always going to tell you what I would do and why, but I'm going to present the full spectrum of the rainbow. I'll tell you where I would land, and you got to make your own decisions. Really important.
Wonderful. Thank you for sharing that tip.
Being prepared is super important because you never know when that right opportunity or that next opportunity is going to come. But in our next segment, Ashley, I think we're going to talk about what everybody believes to be true. And I'd like you to answer this question. Is the housing market crashing, and will it continue to crash?
Can't wait to share.